Good morning, good afternoon, and welcome everyone to the last session of this year's EduFin Summit, the financial education event organized by BBVA Center for Financial Education and Capability. Throughout the previous sessions, we have over 25 experts from all parts of the globe to debate the status of financial education after the COVID outbreak and its role in the recovery and the transition of our society towards a more resilient, inclusive, and sustainable one. Today's sessions will have the following structure. First, we will listen to the views of Nigel Modem, Financial Services Banking and Capital Markets Leader in Ernst & Young from the EMEA region, who will give us a 10-minute keynote speech on the topic of corporate purpose and financial institutions. After that, we will have the opportunity to learn about different ways in which financial corporations improve the financial health of their clients and how this contributes to their purpose. Then, José Manuel González Páramo, Chairman of the Advisory Board of the Center for Financial Education and Capability, will recap the 5 sessions of this year's event. And last, but not least, Pierre-Romain Taillac, Director of the Office of the United Nations Secretary General Special Advocate for Inclusive Finance for Development, will close the event. With no further delay, I will begin by introducing Nigel Modem, who is, as I said, Banking and Capital Markets Leader for the EMEA region at Ernst & Young. He is responsible for managing the portfolio of banking and capital market clients across the region and ensuring that Ernst & Young teams bring insights, ideas, industry knowledge, and innovative approaches to help their clients to succeed. A former banker, Nigel has over 30 years' experience in financial services. He's passionate about the banking sector as a force for good, and believes the sector has a unique opportunity to be at the heart of a more sustainable and inclusive society. Nigel holds a BA in Modern and Medieval Languages from the University of Cambridge and a Master's in Latin American Politics. Nigel Modem will present his views, as I said, on the corporate purpose in the financial sector. Nigel, the floor is yours.
Thank you very much, Lydia, for that kind introduction. 30 years in the banking industry, that makes me feel very old, actually, but delighted to be with everyone today, and particularly pleased to be speaking about a topic that I think is so crucial to the shape of the long-term recovery that we're all so desperate to see. So I'm going to spend the next few minutes just providing a bit of a banking industry backdrop to the topic of purpose and financial well-being for the panel discussion that will then follow. So in stark contrast to the financial crisis of 2008, I think it's generally recognized that banks have enhanced their standing and reputation during the COVID-19 crisis. They've been at the heart of efforts to keep consumers and businesses afloat. They've shown themselves to be adaptable and agile under pressure, and have struck a supportive tone both publicly and privately. One piece of UK consumer research I saw only yesterday, which was commissioned by UK Finance, asked consumers how their views of certain organisations and industries had changed during the coronavirus period. Perhaps remarkably, banks showed the highest positive gain in approval rating alongside the National Health Service. This pandemic has also led to a dramatic acceleration of a number of transformation initiatives such as digitization, data-led customer centricity, resilience. All these themes are high on the boardroom agenda. However, this is not just a case of accelerating an old wish list of transformation initiatives. The events of the past 18 months have caused a fundamental rethink across the banking industry and a reordering of priorities. The whole concept of purpose has really come to life, and we've seen many examples of new or refreshed purpose statements announced even over the past few months. There are a few interesting examples. HSBC recently revamped its corporate purpose, which now reads, opening up a world of opportunity. Bank of Ireland, enabling our customers, colleagues and communities to thrive. ING, empowering people to stay a step ahead in life and in business. Triodos Bank, make money work for positive social, environmental and cultural change. And of course, couldn't forget BBVA, bringing the age of opportunity to everyone, which was an early adopter example back in 2015. We've had bank CEOs calling for a new social contract, and for many, the topic of sustainability has become a proxy for demonstrating commitment to a more balanced and long-term view of value. It's probably fair to say, though, that the focus on ESG has been much more on the E than on the S and the G, and that is something that the sector will need to address. So the shareholder first culture is no longer good for business. Customers and society are now at the heart of the bank's purpose. So what role can purpose have, and what does this mean for the banking sector? Purpose needs to be embedded throughout the organisation to make sure it's not just another version of a mission statement that makes the senior management team feel better. Purpose needs to shine through the strategic choices an organisation makes, the way it treats and incentivises its employees. And purpose needs to come to life for customers at the product and the customer experience levels. There is lots of research that shows that when people have a sense of purpose, not surprisingly, their performance improves. They report better health and well-being, are better team members, and they bounce back faster from setbacks. Not surprisingly again, working in an organisation with a strong purpose has a positive effect on people engagement, resulting in higher energy levels, reduced attrition. Ultimately, through purpose, these businesses can harness the power of their workforce for the benefit of customers and wider society. The emergence of a more purpose-driven banking sector is one reason why this is a perfect time for banks to renew their focus on financial well-being. And let's be clear, the need has never been greater. You've got millions of consumers that are experiencing financial stress due to the impact of the pandemic. The importance of financial health has never been so pervasive across a wide range of demographics. Customers want to feel in control of their finances and increasingly expect their banks to equip them with the tools and the knowledge to achieve that. We at EY define financial well-being as the ability to make confident, well-informed money choices, resulting in financial security for both the short and the long term. It isn't just about the traditional life event transactions, like buying a new house, or getting married, or saving for retirement. We need to think of financial well-being more as an ever-present 24/7 utility, a service that's continually available to support our overall well-being, giving us real-time, personalized data, simplifying complex content, and giving us the confidence to make good financial choices for the way we want to live our lives. Leveraging technology, data, and behavioral science is something the fintechs have done particularly effectively. Now, it's easy to assume that their success is down to their technology. But in most cases, though, their growth and success is down, I think, to finding new ways of approaching a problem, new ways of servicing customer needs, rather than simply automating an existing process, introducing chatbots or data add-ons, account updates sent to people's smartphones. Those things are not going to be enough in their own right to change financial behaviours. The fintechs, I think, have succeeded in bringing both educational content to their customers, as well as offering real-time prompts and suggestions that feel personalised to the individual. We've also seen the insurance industry leading the way on innovative propositions that encourage and reward physical well-being, safe driving, healthy living that unlocks beneficial insurance premiums and other related benefits. The key here is to think about financial well-being in its entirety, and that takes a more fundamental approach to innovation, such as the example of Discovery Bank in South Africa, which offers personalised pricing, dynamic interest rates, differential access to ecosystem partners, all based on customer behaviors. And this data-driven approach can also offer important educational benefits as customers see immediate and tangible rewards for prudent financial decision-making. Financial health is also, perhaps surprisingly, a very live issue in the wealth management sector. Apparently, you can be wealthy but not financially healthy. My colleagues in our wealth management practice have seen a huge focus on financial literacy and education coming from the asset management industry, targeting not only high-value customers, but across the spectrum. Our purpose is clearly one of the driving factors there, but it also makes good business sense. A recent piece of EY research indicates that financially knowledgeable customers are more likely to be loyal, more willing to pay for higher value services, and more likely to engage with lower cost to serve technology channels. Now, there is no question that digital is and will play a key role in driving improved financial health, tapping into the growing digitally native population and those who sometimes reluctantly have become more digitally familiar as a result of the pandemic. However, there is a vital role for human interaction in the provision of financial well-being services. For those millions of customers who find themselves out of work or face mounting credit card bills, for business owners who've taken on additional debt to cope with the impact of the pandemic, and for vulnerable customers more generally, it will be important to have access to people who can provide guidance, empathy, and real-world experience. Financial well-being, let's remember, is also about financial inclusion. And for some of these customer segments and demographics, trends such as the acceleration of branch closures and the relentless move to a cashless society can feel overwhelming. Banks need to find ways of embedding financial well-being that don't alienate significant parts of the population. So just a quick summary then. I think we are now living in the age of purpose and long-term value. The coming together of health and economic crises and growing societal expectations means that 2021 is the year when talking about corporate purpose really needs to pivot to meaningfully acting upon it. It is sometimes said that banking is essential, but banks are not. Embedding purpose and placing the financial well-being of customers at the heart of decision-making will be the best defense, I think, against that statement becoming a reality in the short term. So I'll leave it there. Back to you, Lydia. Thank you very much.
Thank you. Thank you very much, Nigel. Thank you for presenting this very interesting framework on the purpose and the role of financial institutions. I think your very insightful words are very inspirational for all of us and those, especially for those who work in the sector and want to contribute to their purpose through financial education. I will now give the way to the roundtable for this debate about the impact of financial health on people's well-being. Please join me in welcoming Manuel Morales, Evelyn Stark, and Dagmar van der Plas, which I will introduce briefly. Manuel Morales is Global Program Manager of Financial Health at BBVA, the team that develops digital solutions to improve customers' financial health with a single global approach for all the countries of BBVA's footprint. In particular, his areas of expertise is the day-to-day economy, which aims at providing customers to improve, with tools to improve their control on income and expenses, savings, and achieve their life's objectives. Over his 13 years at BBVA, his professional career has evolved from finance, auditing, and strategy towards innovation, digital transformation, and technology, with focus on people and their needs. Manuel holds a degree in business administration from Universidad Autónoma de Madrid and a master's in business innovation from Deusto Business School. Welcome, Manuel. Evelyn Stark is the interim head and financial health leader at MedLife Foundation, a corporate foundation that partners with non-profits, fintechs, and academics across 40 markets with the goal of helping low-income people to build their financial health. Evelyn has 3 decades of experience in financial health and inclusion, including leadership roles at the Gates Foundation, USAID, and the World Bank. She spent 6 years living in Uganda and working across sub-Saharan Africa, implementing financial inclusion programs and working with financial institutions to improve capacity to serve low-income customers with high-quality products. She serves on the board of the US nonprofit Commonwealth and is on the advisory committee for the Center for Financial Inclusion at Acción. Thank you, Evelyn, for joining us today. Dagmar van der Plas is Sustainable Manager at ING Global, where she leads the Think Forward initiative and financial health. From her position, Dagmar oversees the execution of the bank's financial health strategy, designed to help contribute to a financially healthy society and steer the bank products, tools, research, and education to that goal. Prior to her current position, she worked in the retail banking, asset management, and communications units at ING. She holds a degree in applied sciences from the University of Amsterdam. This debate will be moderated by Helen Gibbons, Director of the UK Shareholder Association and board member of the Better Finance Federation in Brussels. Helen is also an observer member of the advisory board at the Center for Financial Education and Capability and graduated from Cambridge University with a degree in Dutch, French, and German, and has worked in the Banque Nationale de Paris in the UK, has had a family office automation business, and created a translation and interpretation agency specializing in finance, in banking, financial corporate governance, and pension funds translation. Helen, the floor is all yours.
Thank you very much, Lydia. It was great to hear from Nigel such a clear account of the purpose of financial institutions, and I think there's a growing understanding that corporations right across the board have a wider purpose beyond short-term profit, because they can only thrive sustainably in a healthy society in which financial well-being is a key pillar. And we're very fortunate to have speakers here representing major institutions on both sides of the Atlantic, each with an acknowledged record of social engagement. So I'm really keen to hear their views on the impact of financial health on people's well-being. So the first question I'd like to ask is, based on your practical experience, what are the urgent issues that need to be addressed to improve financial well-being? And can I turn first to Dagmar, please? I think you're muted.
Yes, I am. I'm so sorry for that. That happens all the time. I wanted to say thank you, Helen, for your question, and also said thank you to Nigel, because I'm really with you on what you shared and how you observe the role a financial institution can and should have in the financial health domain. So maybe let me first very briefly expand a bit on why ING considers financial health as an important topic, and then I can pivot back to your question, Helen. We all know that money is a leading stress for people around the world. We found out that 42% of people in Europe are struggling to make ends meet, and on top of those 42%, another 44% of people aren't likely to be prepared for future needs. And like Nigel also said, financial health is also impacting more than our wallets. It's strongly connected to our physical health and also social well-being. And it's also a bit about the definition in order to be able to answer your question, Helen. So I always like to say that what makes a person financially healthy? Well, obviously they need to pay their bills. They have set savings away. They're planning for their retirement. They can manage financial shocks. And in general, they're happier because they can better reach their goals. And also here the link with the SDGs. We as ING believe that if we contribute to making our customers financially healthy, with that we can contribute to a healthy economy, and also with that help drive social progress. So, and there's the link, I feel, also with what we can do as ING. Money is what we know best. And also as a large global company, we have a responsibility and also an opportunity to make an impact. And the question we keep on asking ourselves is, how can we help people become more financially healthier? Well, of course, you need to have the basics in place, like accessibility and also research to finding out why people make certain financial decisions. But we think the biggest impact we can make in improving financial health is in 3 areas. The first is information, because we believe that the right information at the right time can help people make better financial decisions. The second is innovation, because products and services are quite similar across banks, but we can differentiate ourselves by going a step further and innovating to create tools that help customers make better financial decisions. And involvement, very important, because we have a moral obligation in both the communities we operate in, but also the developing countries, to contribute to people's financial health. And also the Think Forward initiative I'm leading is where innovation, involvement, and information come very, very nice together. It's a purpose-driven open partnership with Deloitte, AWS, the Center for Economic and Policy Research, and also IBM. And it's based on the belief that our society is better off when people make sound financial decisions. And our purpose is to help the people in Europe who struggle to make ends meet. And that's based on research, innovations, but also a large community we have around us to help us really find the key purpose. So coming back to your question, what to do to improve? It's very, very hard because it's about human behavior. It's about planning. It's about spending. It's about saving. It's about borrowing. It's about your income. So I feel it's very difficult to crack the nut with one single answer to the question. I feel you need to peel it off and see in what customer or target groups you can make the biggest impact, and how you can make the biggest impact on people by helping them to first understand their situation, then secondly, help them to offer them products or tools, conscious or unconscious maybe. And the last most important and difficult step is to help them improve their behavior on a sustainable way. So not have a no Starbucks coffee diet anymore for 2 weeks, but really be mindful about what you can do to bring your 5 dimensions of financial health back into the right place. But maybe I can give one of the other speakers the opportunity to maybe share an example. I know Evelyn has quite a few nice examples to share about how we can actually help people with their behavior and changing their behavior for the better good.
Thank you, Dagmar. Yes, indeed. It'd be great to hear from Evelyn now.
Thank you very much. And thank you to the organizers and to my colleagues on this panel. First off, I want to strongly agree with Dagmar. There is an urgent need for a focus on financial health by corporations, by foundations like mine, and by all of our nonprofit partners. So the foundation, MetLife Foundation, looked at 10 countries with Gallup and found that the country with the highest percentage of a financially healthy population was only 50%. Every other country was between 7 and 40%. So financial health is an urgent need. We see this with our company, MetLife Companies Employee Benefits Trend Survey. We see this with our non-for-profit partners like the Financial Health Network that also surveys people and finds that the majority of the population is not financially healthy. So, you know, as Dagmar says, of course, we need products and services that target our market, but we have to really understand our market better than we do. And we need to think more like marketing companies. One thing that I always think of is adjacents or different industries and how they've looked at this. So if we thought about financial products like food, you know, I'm always surprised at the popularity of the vegetable kale. Kale has very good marketing. I don't like kale. I don't like the taste. I don't like the texture, but the kale people have convinced people to eat it. They grind it up into smoothies. They cook it with coconut milk. They take out the bitterness. They use baby kale in salads. I'm joking a little bit, but we try to educate people into unjoyful activities, like establishing an emergency savings account, savings for retirement, paying off credit card debt, avoiding credit card debt. We don't often think enough about how to make savings interesting, empowering, or even fun. So paying off credit cards is also not fun. Neither is avoiding all wants and living only within your needs. And sometimes I hear that people say that, people don't behave rationally. And they say this more about finance than they do about food, which I think is interesting. Nobody tells me that I'm irrational because I don't like kale, but they tell people that they're irrational because they're not saving for retirement, which is 40 years away. And irrationality often is irrational only if it's uninvestigated. So one example that I worked with a nonprofit that delivers a financial education program. They really wanted their clients who happen to be Iraqi refugees to join a credit union as opposed to the mainstream or high street bank. The high street bank offered free checking for 6 months, and then it went to full cost. The credit union offered a low fee checking from the beginning. The financial education instructor kept showing the class how to do the math, how to demonstrate that the high street bank was significantly more expensive than the credit union. But the clients kept going to the high street bank. They were very irrational. So when we asked the partner to dig deeper, that maybe financial education wasn't the issue, we got some resistance, but they did. And when they walked into the high street bank, they immediately figured out what the issue was. The high street bank had hired 2 Iraqi bank tellers. So the clients were going to the mainstream bank because they were comfortable there. They could speak their own language. They could actually look forward to going to the bank. So in other words, if our nonprofit partner really wanted the clients to use their credit union, they could have asked the credit union to hire an Iraqi teller. So I sometimes think that we think everything's in the product. We think about what the customer needs, and we don't think about what the customer wants. We don't think about how to make our activities more fun, more easier to operate in and to use. So, if we really want to look at financial health, I think it is almost an innovation to say that we need to get deeper into understanding our customers' wants and needs. And not only to think of things that are good for us, but also things that go broader and help us achieve our goals in financial health.
Thank you, Evelyn. I shall remember that expression, unjoyful activities. I think that's a great one. Manuel, can we have your take now, please?
Yeah, thank you very much, Helen. Thanks very much, Lydia, and the team for inviting me. It's a pleasure to be with you and my co-panelists, Evelyn and Dagmar, to share some thoughts and ideas on financial health. I really, Nigel almost touched upon lots of the topics that I wanted to share with you, and for sure for BBVA. Our purpose, he mentioned, is to bridge the age of opportunity to everyone. And we have one of our main strategic priorities is improving people's financial health. That's why we want to stand for, together with sustainability. So for us in the bank, financial health it's key core part of our strategy. Regarding your question, I think that the urgent issues that there have been already mentioned. They're not new for any of us, and in fact have been mentioned in previous session of this summit. The first one is financial education and awareness that you have to take care of your finances, in line with what Evelyn was saying and Dagmar. Also, the second point that I think is very important, it's the using digital tools and as enabler for helping people with their financial health. And the third thing that I think it's very urgent and important, it's looking at the vulnerable segments of the population and the inequalities that that exist that maybe have been growing with this pandemic that has impacted very negatively in the economy, in the savings, in the income of people. So now more than ever, taking care of financial health is very important. In terms of financial education, I think there are two main areas that got to be addressed. And when we talk about financial education, people sometimes think about inclusion, and I think that it's more broader because it doesn't matter if we are talking about an advanced economy or a developing economy. The level of income or the education, financial education is necessary with maybe a different approach, but to anyone. And I think that one of the main topics that has to be addressed is understanding the products. The financial services industry is very complex, and I think that people get stressed when they approach a bank, understanding the products, the services, the terms and conditions, how money works, the implications of contracting a product. And that's why we at BBVA, we are using since many years the transparency, clarity, and responsibility principles in all the products that we launch, both in branches and in digital. So I think that's very important, understanding products. And the second area of education that I think is very important is how to manage money. And I think that it's already been mentioned, but the customers are more worried on the day-to-day things, how to pay, how to withdraw money. But what is much more difficult is to have the big pictures, understanding how the balances work, the control of their finances, the anticipation, the long term, that topics, I think that they need educational efforts that I think that both fintechs, big techs, and the financial institutions and financial services, insurances, and everyone, we are doing efforts to try to improve the understanding of the customers of how to manage their money. And I think that it's going to help to gain trust also in the financial institution. So it's going to be good for the sector if we can gain trust for the customer, because we are helping them. So I think that's key. And digital software, which is my field of work, can help a lot with that, because with the pandemic, the digital behaviors of the customer has increased. We have all-time record in terms of mobile customers at BBVA, more than 6% penetration in mobile customers. Digital customer acquisition has peaked. So we got to take advantage of that digitalization of the customers to offer them the digital channels as learning opportunities on how they can manage their money. It's a low cost and very convenient. It's 24/7, so we can help the customers in a very convenient way. So I think that leveraging on digital can have an exponential impact on how we can improve people's financial health. And my last point was the vulnerable and segments. I think that it's very difficult to help people to improve their financial health if they don't have income. So we got to focus on that segment, especially impacted by the pandemic, as unemployed young people looking for the first job, elderly people, small businesses, and also I think Nigel mentioned people with mental illness, depression problems, maybe also due to money, due to debt. And I think that we should try to understand what are the needs of that vulnerable segments and try to develop tools to help them to do something with their financial health. And that was my ideas, the ideas that I wanted to share with you.
Thank you very much, Manuel. Very interesting insights. So mindful of the time, I'd like to move on now to question 2. In the last 15 years, the world has witnessed 2 major financial shocks, the credit crisis and COVID. How can financial resilience be improved to cope with the next shock? Can I change the order slightly? Can I go to Evelyn first for this one, please?
Wonderful. And actually, I'll pick up on something that Manuel just said. I do think that transparency and clarity is a requirement in helping protect against certain shocks. And this is about more of the credit crisis. And it's something that the supply side financial companies can do. They can be more transparent. They can provide clarity as to loan costs, as to fees, et cetera. And if an institution provides this clarity and this transparency, it does not require trying to educate individual customers one by one or million by millions. The US credit crisis, for example, thousands of people lost their homes. Many of them had never understood what their mortgage meant that they had actually signed. These were very unclear, non-transparent mortgages. So I think that that is actually a key issue facing shocks like the credit crisis. I also want to pick up on Manuel's focus on jobs, employment, and workforce. You know, we've covered that even rich people can be financially unhealthy, but a good quality job is a key to individuals being able to have that kind of stability to think about their next move, how to save. So I think we've all read enough books on the behavioral science, and we know from our own lives that when we're stressed, we are simply not able to manage what the economists call temptation, but what I think we could all just call life. Right? When you're stressed out, thinking about putting in $500 to a retirement account just doesn't sound like something you want to do right now. So not only does the job provide that stability and comfort to be able to clear your mind and think about where are the kids going to school? Is our house in a safe neighborhood? Do I have an emergency account? Can I start saving for the future? So I think that's huge. But the workplace is also the place where many of us get our financial services. That's where we automatically deposit our money into a savings and a current account. It's where our life insurance very often comes from. It's where our health insurance very often comes from, depending on your country. So, I mean, the importance of jobs, employment in the workforce can't be overstated. But financial resilience is always going to be a challenge, and there are limitations to what an individual could possibly do on his or her own. So in the US, the savings rate spiked to about 30% after the pandemic started. It's normally around 7%. So there's a lot of room between 7 and 30% to help people build savings cushions in the normal course of life. It's not an easy ask building a savings cushion, of course, it's difficult. But, you know, we can, as our organizations are, as the foundation's partners are, improving opportunities for savings, bundling it with other activities, rounding up purchases so that the roundup part goes into a savings account. There are efforts to discourage overspending, financial coaching, fair price credit, and back to the transparency and clarity, of course. And of course, there's a role for insurance. There are efforts and there are products and services that ensure that people have access to affordable and useful insurance. And of course, pandemics are hopefully rare. Our governments will always have a role to play here. I'll leave it to my colleagues to talk more about policy and regulatory environment, which isn't something that I and the foundation deal with. Thank you.
Thank you, Evelyn. Very interesting data there on the savings rates, quite amazing. Manuel, can I turn to you again, please?
Yeah, thank you. I think that in terms of resilience, there's not a magic formula. Each person is different. No economies are the same. The economic situation of everyone, the preferences, the life goals. So I think there's not a magic formula in here. I think it goes more by the personalization. So what we have been doing in my program, which is a global digital factory program, and the focus is on helping people to improve their financial health. We've been working on financial health for many years, leveraging on technology and thinking of tools for make the best financial decision, and that's what we've been working in the past. But the next step, I think it could help more with resilience. The next step that we took this April and in Spain, and we are launching in the rest of the country, is based on an advice based on personalization, proactivity, and actionable insights. So when we say personalized, we see that there is we don't see a transversal idea. Everyone has different needs, and what we see is that the advice you need does not depend on what you have, on your financial situation, independent on how you use your money. So we are thinking of person by person advice. Then the proactivity. You don't need to, navigate through an app. We send you contextualized message as you are doing things, maybe a payment or checking your account, and we suggest actions to improve your financial health in that particular moment. And the actionability is very intuitive. Is that we send you a message. We propose actionable one-click actions to help you. So we think that with that, we are going to a next level on advice, and we are going to a more proactive, intuitive tools, personalized ideas, and the app adapts to each person. We want to have a dialogue with our customers, that they tell us what are their intentions in order to adapt the advice what we are giving to them, and also alert them of things that are happening in the present and things that are gonna happen in the future with forecasts. And with this idea, we think of 4 dimensions of financial health in which we can apply this proactive, personalized, and actionable advice, which I think that Dagmar almost said. But initially, you got to control your income and expenses, independent of the money you have. Once you have your income and expenses under control with categorization, budgeting, or subscription, analyzing your subscriptions and supplies, you can go to the next step, that is save. You can save for specific goals, or you can save for saving a financial cushion or a safety net for things that may happen. You may lose your job and things like that. Then when you have controlled your income and expenses, and then you have your savings, you can go to buy things or acquire things that you cannot save for them, and you step to manage debt, understanding what healthy debt is, the limits you have, the capacities, the pricing of debt. For example, why to choose a credit card debt or consumer finance debt. And then once you have these 3 first steps done, you can start planning your future. We start with the net worth. We analyze what the customer have, the cash, investments, and non-financial assets, real estate. We value the real estate, and subtract the debt, mortgages, consumer finance, or credit card debt. And that's a starting point in which we want to start providing advice on how to improve that net worth to the customer, and optimize their investment. And with this, we hope we are controlling different dimensions of financial health, and we can improve that resilience that you were asking. So we think that we can give a very, very personalized financial health independently of your financial situation. And that's how we see that resilience come from, and it's always also linked to the education that I have already mentioned.
Thank you, Manuel. And now to Dagmar, please.
Yes, and maybe a very short example, because I feel a lot is already said by Manuel and Evelyn. Resilience is critical for people, and let me share an example that we're currently experimenting within the Dutch business unit of ING. It's an experiment to help people improve their short-term buffer savings, because we found out, and also this morning I've read an article of the Financial Health Network. They did a very quite extensive desk data survey around short-term saving cushions. And within ING, almost 25 of our primary customers, 25%, sorry, has too little savings to absorb unforeseen shocks like a COVID pandemic, an unexpected shock like a divorce or the loss of a job. And that's a very big risk. It's a societal risk, but it's also a business risk for us as a bank. So here again, we could see how we can help those people improve their short-term buffer savings. And this is why we started an experiment in our banking app to help people with, based on behavioral insights, to help them nudge towards better financial behavior. So to really instigate them to start saving, and not only to start saving, but also to keep their saving on their saving deposit. Because we also see very often that people have the intention to put saving on their account, but then after a few weeks, they take it away again. So we're really looking again for that long-term sustainable behavior to help people improve their saving cushion. And if they indeed have that saving cushion, and if it's enough, we very much encourage them to build up their wealth via investment or other possibilities. But first, you need to start making people less vulnerable and more resilient to help them improve their short-term buffer saving. And maybe a bit sensitive of time, I have another nice example, but let's see if that can be shared maybe later in the roundtable, Helen.
That's great. Thank you, Dagmar. So we'll move on to the third question. And I was really keen to get some concrete examples, and we've already touched on a few, but perhaps we can hear about some more. So the third question is this: can you explain how technology and innovation are being used in your organization for the benefit of financial well-being? Can I start with Manuel on this one, please?
Thank you, Helen. In our case, BBVA Innovation and Technology is embedded in our DNA for many years, and as Nigel said, is reflected in our purpose: bring the age of opportunity to everyone. So we wanted to move from being infrastructure providers around money to helping people, putting people at the center of our strategy, and we think that it's also be positive for us in terms of retaining, serving, and gaining customers. So we put the financial health tools based on digital functionalities that, as I mentioned priorly, we have been releasing in our app for many years. And also, as financial health, it's a strategic priority. As I mentioned, we have training for all the employees across the BBVA footprint in terms of financial health for everybody to have understanding of what is the strategy that we have. What we want to do as bank with our customers in terms of financial health. And also it's embedded in how we design innovative ideas, in particular in our teams, in the digital factory teams. We use design thinking for all the features that we are thinking. So we put the person, the human in the center of the design and definition of the features in our agile teams. We have very powerful design teams in the scrums. We do a lot of customer research before releasing. We analyze every single screen that we are going to propose to our customer. We also receive feedback from the customers when they are using our functionalities, and iterate and pivot and try to always have new releases in MVPs in order to fine tune our value proposition in terms of financial health. Also, as already been mentioned, we have behavioral economics teams in the scrums, helping us to understand the biases that we have all as humans when we make financial decisions. And in terms of technologies, now we are living in incredible, very exciting times in terms of technologies impacting the financial sector. We have artificial intelligence, robotics, quantum computing, big data, decentralized finance, blockchain, cryptos, and we, from our perspective in our team in the financial health program, we are seeing, understanding all of them, working with other teams from the bank, and see, depending on the maturity of the technology, how can we apply them to financial health features, mainly AI and big data by the time. And also, we are continuously interacting with the fintech ecosystem. We work with the open innovation team from the bank that help us. They are scouting the market, having relationship with different fintechs, and we have a summit where we meet them, and we are doing POCs with lots of them. We also have Propel Ventures, our venture capital investing in startups in San Francisco and London, and we also have a meeting with them. So on partnerships. So we are all the time interacting and thinking how all the innovation that is going through the globe we can apply to our solutions. And we see that the customers are very eager to use these new functionalities and tools that are in the market. There are lots of startups, of fintechs with cash flow analysis, forecasting, insights, budgeting, and saving tools, robo-advisor, subscription and recurring payment, which is now very incipient with the subscription economy that we are going through. And there are more innovative tools that are going in the market as cryptocurrencies. We have in BBVA in Switzerland a first step in analyzing, trading, and custody of Bitcoin, and we will see how if we can include some in the financial health in the future. It's not in the short term, but for sure it's gonna be some noise and things going there in the market. There is also an area of innovation in terms of giving advice and out of the bank app ecosystem. So with suppliers, fees, recommendations, and things like that are also going on in the market. The shared economy, not thinking of advising just a person, advise the relations that they have with other people, and for sure also in the arena of chatbots and smart assistants. It's also going. There are lots of things going there. So we are working with all of them, trying to take advantage of the things that are happening in the market.
Thank you, Manuel. Could we hear about the ING take on technology and innovation, please, Dagmar?
Yes, thanks, Helen. And I feel ING has quite a similar approach like Manuel shared. So I feel we're on the same page there. Let me share 3 examples I just jotted down in my notebook. The first is an innovative example how you can collaborate with others in the industry and also with municipalities and other companies where innovation and data have a very strong connection. In the Netherlands, we have the Early Debt Prevention Program. It's a collaboration between banks, including ING. but also other Dutch banks, but also a gas and a light company. Municipalities are part of it. And what we do is that we try to signal based on the data we have as banks and gas and electricity, but also phone companies, that we try to see if a person is likely to fall into problematic debt. So if you have not repaid your mortgage for a few months, or if you're behind with your insurance, that's a signal for us to keep on warning you, or to start warning you. And that warning is a very mild warning. It's like a little nudge saying, hey, Dagmar, you might want to consider to reach out to a person if you feel you're in stress or if you feel you're in debt. And then it's a very, very strong, both physical but also digital kind of road or path you can walk. And that's an example I really would like to give, because it's, to me, it really strikes, because it's a collaboration of the willing, really helping people to prevent them from falling into problematic debt. So a very innovative approach, I would say. And the second example I would like to share is how we approach innovation within the Think Forward initiative. That's very strongly connected to financial health. Deloitte has built a very intense 5-month program for startups who are dealing or helping people with financial health. So it could be, for example, a startup who's helping you with overview. It could be about unwanted subscriptions. There's a very broad palette of startups out there really concerning about people's financial health. And with the Think Forward initiative growth program, we help them with all the issues they might have. So we provide them with experts. We help them with behavioral nudges, ultimately to help them scale their user base. And we have the strong opinion and belief that if we have more users for those financial health startups and scale-ups, we help more people to become more financially healthy. And the last example I wanted to share is Money Talks. And Money Talk is not a digital innovation, but it's more a paper innovation. But I really like the link also with the BBVA Center between financial literacy and education, because we recently did a market survey with the Think Forward initiative, and we found that 69% of people in Europe, they strongly agree that financial health should also be taught in schools. And that might be explained because only 17% of adults in Europe say that what they know about personal finances they learned at school. And another 41% say they learned it from their parents. So another interesting insight I wanted to share on how financial health can be improved is that people want that to learn by doing, with trial and error, followed by learning from online and books. And here I wanted to share the example of Money Talks, because that's a very nice bridge between the parents and school to make our youngest society, our kids, aware, and also to spark interest from an early age onwards. And also here I have a very strong personal connection. I have 3 kids myself. And for me, it's quite critical to, at a very early age, help them to understand the importance of money and all the aspects around money. And Money Talks is a 5-day game, and it encourages parents to have an open and fun conversation with their children. And it's, for example, the needs versus the wants. It's about earning money, so the importance of having an income. It's about borrowing, so it's not saying you should not borrow. It's saying if you borrow, make sure it's responsible and sustainable. It's about spending wisely, so not letting yourself caught by advertisement, but really do that smartly. And also saving money is an element of that Money Talk. And that's developed on research insights we gained from the Think Forward initiative. And it's a very engaging and fun game to play, with ultimately the purpose to improve the financial literacy of our, little future leaders, if you like. And to me, this is innovative because it's combining research insights with the help of parents and schools, ultimately to help our kids to become resilient, but also help them with their financial literacy and education. So that's the third, maybe a bit quirky innovation example I wanted to share, Helen.
That's great. Thank you, Dagmar. Some very interesting examples there. I was very interested, particularly about the nudge theory. Very interesting uses of that. And finally, may I turn to Evelyn, please?
Sure. Both of you have made me think of 10 more things than I had thought of originally. But one thing, just building on Money Talk, we have a program with the Sesame Workshop called Dream Save Do, and anybody can Google it and find it. And again, it's the same idea, enabling parents to talk to their children about money. Many cultures do not want to have that conversation. And the same figures or different figures, but the same scale on where we learn about finances. Home training is always going to beat education in this case. And so I do think ways to get parents and kids to talk about it is great. I'd also love to talk about a couple of our other partners, Common Sense Lab, Commonwealth, Village Capital, our innovation program in Asia with Microsave and UNCDF. And I'm just saying those names so that if anybody wants to Google them, great sources for examples of programs that are working, that are innovative, very highly digital. And I thought I would just bring up one that is not exactly digital, but it's called Prize Link Savings. And it's based on a behavioral insight that's not going to surprise many people, but that lotteries are fun. Savings is not. And so what if for every $25 that you deposit into your bank account, you get a ticket? And this ticket can be used to win a lottery at the end of each month. And maybe once a year, that ticket can go into a lottery for a much larger prize. And this is quite popular in the US. It's I think many of you will have remembered it from Marguerite Robinson's work in Indonesia as well. And whether you're getting a bicycle or $10,000, this kind of prize link savings encourages just the behavior Dagmar mentioned before, which is getting money into your account, building a little bit more, keeping it in your account. So finding those innovations that really make savings tangible, fun, and useful to improving financial health. And then I think my colleagues have said really what's so important about digital, all the good parts of it. And I would just say that we have to remember it's not all good. The consumer debt industry, sports betting, scammers, they're all already very active in digital. So we really need to understand our customers, design for them, and help them figure out what are good products and what are not. The competition on our phone screen is even greater than on the high street. They're more likely to find 10 other apps that aren't aiming to help increase their financial health on their phone. So another innovation that combines the digital is this high touch, light touch programming. So a lot of our partners really focus on this. They take the time for high touch and they use that person-to-person interaction for the highest value needs of their customer. The light touch, the digital touch is where, here, upload this document, make this system work. And that you can do on the light touch, but that conversation where it gets richer is where the high touch really comes in. And especially for underbanked people, for people who are in crisis, for low-income people in general, people want a high touch. They want an in-person element. So figuring out how to put the person in the right place and the digital in the right place, I think is the key to making digital really work for financial health. Thank you.
Thank you, Evelyn. Some fantastic examples of real life action there. And I think that helps to put flesh on the bones when you're explaining to people how organizations can help build resilience and improve financial well-being. Thank you to all the panelists. Been some really great input. I believe, Lydia, you may have some questions from the floor.
Hi, Ellen. Yes, indeed. We have several questions. Mm-hmm. And thank you very much. Well, first, let me Thank you very much for this very interesting panel. We have learned a lot. It's very inspiring. So we have several questions. We have a first question regarding the purpose. An attendee asked us how banks can make their purpose reach customers without being accused of practicing social washing. I don't know if any of you want to come with this question. And what do you think, Helen? Shall I give the questions we have, or you prefer me to go one by one?
How many questions do we have, Lydia? Do we have a lot?
1, 2, 3, 4. Yeah, 5. Well, I don't think we can make them all. So I'm gonna just give you the 3 blocks, okay? Well, regarding this block, someone else also asked us about any studies on on the impact of financial health, to see if we have any literature that we can share. Then we have a couple of questions regarding technology and digitalization of finance. The first one is how are your organizations mitigating the risk of exclusion associated to the use of technology, for example, the exclusion of elders, if you are promoting some practices for digital skills. Also, there is another question addressed to BBVA this time, to see if we feel that rural communities in developed countries, so in countries like Spain, can benefit by the adoption of technology in the financial arena, if we feel that this is a good substitute for the branches in remote places. And then we have a question, which is, I have to confess, is mine, for Evelyn, sorry, because we launched several surveys in the EduFin Center, and we feel that insurance is not very well appreciated, I will say, as a factor to take care of financial health. When we ask about, do you have an insurance, do you think insurance is important, this is usually what customers don't answer, or answer no. So we would like to know if you have any, Evelyn, you have any suggestions to how we can create awareness of the importance of insurance. So I think I will leave it there because we have only 10 minutes, and I think that would be it. Helen, you want me to review them? So we have one about the purpose, how we avoid being accused of practicing social washing. We have one on exclusion of elders, how technology can also reach this group, and also the one on rural communities, how can they benefit from the adoption of technology.
Who would like to dive into any of those questions? I'm sure something will have triggered some ideas. Evelyn, would you like to respond to any? Oh.
Sure. I wish I had the answer to how to better position insurance in surveys regarding financial health. But I can only fully agree that we're not asking the question very often. So sometimes I see questions like, do you have adequate insurance? Well, that requires me to understand what adequate is. And it requires me to disaggregate in my head my car insurance, my property insurance, my health insurance, my life insurance. So one of the issues in a survey is that there's not much clarity. And whenever we get few responses to a survey question, it's usually incumbent upon the survey design team to go back out to clients and ask them the question to find out what would be a better way to make that clear. And I know that part of the problem is we all want to do surveys with 10 questions. And I just came up with 4 insurance products in off the top of my head. So I think that this, I personally, and not just because of where I sit, insurance is no doubt a key product in resilience. That's its purpose. So the fact that in many of our broad financial health surveys, we pay scant attention to insurance is an issue that I think the banks and the insurers could definitely work on in terms of how do we develop this into a better question set? How do we do some deep dives with customers to better understand this? Do we even use the term insurance? Or do we say, how do you manage a particular crisis? How do you deal with this kind of shock? And then see what the responses are. It's more difficult, but clearly it's a key area in this space.
Thank you, Evelyn. Dagmar and Manuel, do you have any points in those questions you'd like to pick up on?
Yeah, maybe I'd like to pick up on the question about the impact of financial health, but Manuel, please go first, because there was also a specific question towards you, so I let you go first.
It's okay if you want, Dagmar. For me, it's okay if you want. I was going through elderly and rural areas, the accessibility of digital, but go ahead if you want, I don't mind.
Now, maybe I can be very, very short about the impact of financial health. That's a very difficult topic because it's quite difficult to prove the impact you can make if you really look to outcome and output. Instead of we launched this information campaign or this product, you really would like to look to the change of behavior people are showing. And that's quite difficult. And I'm also referring to the following speaker, Pia from the UNSGSA. That's a United Nations working group I'm personally part of. And there we try to crack the nut how to search for one specific, Evelyn, by the way, is also a part of that group. There we try to crack the nut if there's one, like we see in the climate domain, the CO2 emission, there's not one headline indicator helping us to help people to move towards a better financial health. So it's very important to look to outcomes and not only to reach and relevance in the activities we explore as financial institutions and others caring for people's financial health. So maybe that's a short answer to the question. Maybe a call for action also for banks if you're listening in. There's a recently launched UNFFI principles for responsible commitment around financial health, but also financial inclusion. So this is the opportunity for us as peers in the banking industry to jointly work towards KPIs around financial health, really looking to outcome behavior and not only to the reach and the relevance. So then hand it over to you, Manuel, to answer the other questions.
Thanks very much, Dagmar. I'm going through, I think the two questions, the one regarding rural areas, accessibility and elderly. I think that digital, as I mentioned in the question, it's a way of having direct impact in the smartphones that we have. So I think that for rural areas, in terms of convenient, for some particular actions that doesn't imply complex activities and also linking with understanding the products, digital, it's great for doing a transfer. You don't have to go to a branch, you can do it. But in terms of financial health also, with this approach that we have of proactive, personalized and actionable, but I think that branches would have a key role in the future for specific complex matters and actions. So I think that the perfect thing is a good app, a good digital experience, multi-channel, that the customer is convenient 24/7, but also the human to human and the branch with maybe a different role model than the one that we have now, more less thinking of servicing and more in value added. It's important. So for the rural areas, I think that using digital, it's a huge step because maybe they have to go through long distances to achieve a branch, so they can do lots of things, but also the human to human it's gonna be important. In fact, I'm working for the digital factory as mentioned, but we are also working with the branches networks team in order to align what we are working on digital to the service that we are providing in the branches. So we are working together, and I think that both together it's gonna be a huge great service for the customers. In terms of the elderly, is almost the same. When we are thinking of personalized advice, we need to think also personalized solutions in terms of apps. So we are thinking, and we are on an early stage of analyzing what could be a light app for other segments that need also vulnerable with less functionality, more easy and more adapt to the services that they need. What is true is that banks, what we have been doing in the latest years in terms of digital transformations is trying to to move the experience that we had on the branches, the products that we have on the branches to the app, more than thinking from scratch as startups or big techs are doing. What would be the first? So the next step for us as bank is put more easy to access, more simple with less products and more adaptable. And also another thing that we are working is on a personalized app, so you can choose what things you want to appear in your global position in the app. So you can choose to avoid complexity, and maybe for older people it can be a very simple app with the transactions they make, a simple thing, and that's for sure coming in the next quarters and years in the sector, and the digital transformation of the digital apps.
Thank you, Manuel. And indeed, thank you to all the panelists. It's been a fantastic panel. And at that point, I'd like to hand back to Lydia.
Thank you very much, Helen. It has been indeed an excellent panel. Thank you, Dagmar, Evelyn, and Manuel for this panel, for your sharing your knowledge, your opinions, your views on the topic. As I said before, it has been very inspiring and useful, and I think we learn a lot from all of you. Thank you so much. And thank you, Helen, also for your dedication and for your endless support to the Center. We really appreciate your help. I will now give the floor to the Chairman of the Center's Advisory Board, José Manuel González Páramo, who has extensive experience in the financial industry, both in the private and public sectors, in the regulator sector, actually in the regulator side, and whose biography I will not attempt to summarize. José Manuel will share with us his concluding remarks on this year's summit. José Manuel, over to you.
Thank you. Thank you, Lydia, and good afternoon, good morning to everyone. And thank you for attending this year's summit. Throughout the last weeks, we have had the opportunity to learn and to be inspired by 28 experts from 12 countries who have debated about the status of financial education after the pandemic and its role in the recovery. I would like to thank all of them for their generous participation and their priceless contribution to the summit. And this diverse and highly qualified group of practitioners, researchers, government officials, and regulators have left us with very interesting findings. But above all, one key message that I would like to highlight, because this was lingering in all the sessions: financial education as a fundamental lever for the inclusive, resilient, and green recovery of our society. It is by no means easy to summarize in a few minutes the very relevant and thought-provoking messages and discussions that we have had, but let me give it a try. So I'll try to outline the main conclusions as I, in my take of this 2021 EduFin Summit. The first of them is that financial education is essential to promote sustainable inclusive growth. In his message, Carlos Torres, BBVA's chairman, emphasized the need for an inclusive and sustainable growth model and explained that financial health is crucial to achieve financial well-being and to better deal with unexpected emergencies. Another key message from the first session is that we need a change in behavior to promote sustainability. In the same way that education is the most important tool to achieve change, financial education can be a key enhancer for the change required by sustainable finance, as Margarita Delgado, Deputy Governor of the Central Bank of Spain, concluded. Indeed, financial education goes hand in hand with the priorities of sustainable finance, since it can create and increase the necessary knowledge and awareness on sustainability across all stakeholders. As Florent Messi from OECD recognized, financial education is not a silver bullet, but is a precondition for sustainable finance. No doubt that the upcoming financial competences framework designed by the European Commission and the OECD will contribute to this by empowering citizens and creating the trust that they need to drive capital towards sustainability. The pandemic has contributed to setting the focus on sustainability and the achievement of the SDGs, but it has also accelerated the adoption of technology. Financial digitization has grown exponentially, and it is part of our daily financial routines. While digital financial products and services have been a relief for many families, they have also stressed the need to improve the level of digital financial education in order to guarantee equitable access. At the second session, Access to Financial Services and the Digital Gap, experts identified two great challenges of digitization in finance. First, guarantee the access to financial services and products, and second, provide digital training to secure their adequate and safe use. They concluded that the role of financial services providers, either traditional banks or fintechs, is fundamental in order to make financial digitization more inclusive and secure, especially in the context of a pandemic. In this regard, Ratna Sahai from the IMF emphasized that financial inclusion not only improves economic growth, but also reduces inequality significantly. The panelists reviewed the different factors that hinder digitization, like the limited connectivity, lack of devices, and the absence of digital skills that determine the digital gaps in finance, especially for the more vulnerable sectors and groupings like the rural communities or women. While connectivity and devices are essential to access digital services and products, financial inclusion is key for people to acquire the necessary skills to be included in digital finance. As stated by Leora Clapper from the World Bank, experience is the best way to learn. We can conclude from this session that it is time to integrate financial education into the flow of digital products and applications. Digital finance is a great opportunity but not free of risks that we must all, financial intermediaries, customers, governments, regulators, be aware of. This is one of the reasons why financial education is so important. New technologies are changing the way financial services are delivered, and financial inclusion must come hand in hand with digital inclusion. And in this journey, education is essential. In the third session, devoted to financial education and vulnerability, experts concluded that one of the most dramatic effects of the pandemic has been the increase of people in situations of financial vulnerability. The pandemic has proved that financial vulnerability can reach us all. Being financially literate, of course, helps to reduce the chances of falling into vulnerability or even poverty. For example, savings can be a shield that protects young people and the elderly from financial vulnerability. And as Jose Antonio Arce stated, the key to savings is saving more, saving better, and saving enough. At the round table, we had very interesting reflections such as the need to support vulnerable populations through the digital transition, or the responsibility that financial providers must assume to mitigate risks coming from the way digitization is changing financial services. One of the key takeaways that emerged during the fourth session was that the private and the public sectors must work together to improve national financial education and financial inclusion strategies and plans. During these sessions, 3 experts shared their insights into the collaboration between different players in the field of financial education from their own area of expertise. This session concluded with an interactive workshop where attendees shared their experiences regarding obstacles, success stories, disruptive elements that affect the expansion of financial education. In this workshop, the participants cited examples of good practices, but most importantly, they identified the challenges for collaboration. Among them, they cited the difficulty of measuring the impact of intervention, overcoming cultural barriers so that people do not perceive financial topics as difficult to deal with or to talk about, almost like taboos, the need to support the educational sector with solid financial classroom contents, and finally, informality in developing economies. Finally, the discussion focused on elements that are common that might disrupt collaboration, as big data, as a change maker on financial product design. And today, we started with Nigel Modern. He provided a number of inspiring reflections, and in particular, he said we are living in the age of purpose. We've been focusing perhaps too much on the E of the ESG acronym, but not so much on the S and the G. So in conclusion, we need to redefine the purpose, leveraging on technology. And the second part, we have the representatives of the financial industry here with us, moderated by our dear Helen, that had an interesting debate on how financial health can contribute to achieving greater well-being, and how to leverage on technology to provide personalized advice and other financial solutions. From that discussion, and I cannot make justice to the richness of the debate, but we can conclude that financial empowerment helps improve the financial health and achieve financial well-being. There is a correlation between higher levels of financial literacy and greater ability to plan, save, and cope with emergency expenses and financial shocks. Today, I'm very proud to announce that in a few weeks, the first position paper of BBVA's Center for Financial Education and Capability will see the light. For months, experts connected to the center since its creation in 2017 have been working on the elaboration of the EduFin position paper that will discuss the center's views regarding financial education, its future challenges, and its contribution in securing inclusive growth. Initial approaches and proposals and recommendations for action have been discussed throughout the 5 sessions of the summit. All that has been said and concluded in this conference will be used to complement the document in the final version that will be published in June. The Center for Financial Education and Capability will continue to focus on creating awareness on financial education as a key element to improve people's financial health and resilience, boosting people's well-being and helping the transition towards a more sustainable future. Despite the extraordinary uncertainty and the unprecedented challenges that we are facing, we believe that now, more than ever, the purpose of the center is key. EduFin Summit is the flagship of the center, and aims at offering a space for discussion, exchange of ideas, and innovation in the field of financial education. In spite of the difficulties posed by these remote formats, we hope to have achieved your expectations in this fourth edition with an exceptional group of speakers that have been with us. Thank you all for your attendance, and I wish you and your families my personal best for your health and safety in these difficult times. Lydia, over to you.
Thank you very much, José Manuel, for this excellent summit summary. And thank you also for your continued support to this summit and to the rest of the activities of the center. It's a true luxury having you with us. Now to close the event, I will give the floor to Pia Roman. Pia Roman is Director of the Office of the United Nations Secretary General Special Advocate for Inclusive Finance for Development. She joined the office after spending 18 years at Banco Central of Filipinas, where she worked as Managing Director of the Center for Learning and Inclusion Advocacy. This included a focus on inclusive finance, particularly to craft policies and regulations, develop partnerships for financial education, strengthen consumer protection, building stakeholder relations, and implementing the National Financial Inclusion Strategy. Ms. Tayac holds a bachelor degree in public administration from the University of the Philippines and a master's degree in international affairs focused on economic development from Columbia University in the US. She's also a fellow in the Fletcher School Leadership Program for Financial Inclusion and Tufts University. Pia, the floor is yours.
Thank you very much, Lydia. Thank you to BBVA for inviting us to this 2021 EduFin Summit. It is an honor to speak at this last day, following all the rich discussions so well summarized by our Chairman, Jose Manuel, but especially after this session that talks about purpose and examples of private sector initiatives. These topics are at the heart of the advocacy of Her Majesty, Queen Maxima of the Netherlands in her capacity as UN Secretary-General's Special Advocate for Inclusive Finance for Development. In this role, she is a leading global voice in promoting universal access to and responsible usage of affordable, effective, and safe financial services. As we know, financial education is a necessary complement to financial inclusion to ensure that customers not only have access, but have the ability to understand, choose, use financial services that fit their needs, their wants, as we heard in the roundtable, and their capacities, so they can fully benefit from participating in the formal financial system. However, we know that when there are gaps in access, in knowledge, and capabilities, the impacts could be devastating, as we have seen in the COVID-19 pandemic. It is estimated that up to 163 million more people around the world could potentially be pushed into extreme poverty by the end of the year, with the financially vulnerable being hit the hardest. Workers in the informal sector, small businesses, smallholder farmers, women have also been disproportionately affected. UN Women estimates 47 more women and girls that have already fallen into poverty. But we also saw how the pandemic catalyzed greater digitization, which presents enormous opportunities, as we have heard in the past days. Over 200 countries have expanded social protection measures, many using digital IDs, payments directly into accounts or mobile wallets, and a shift to online payments for goods and services. These are important entry points into the digital economy. The pandemic has also led to a broader acceptance and recognition on the imperative of financial inclusion and response, recovery, and rebuilding towards a resilient future. It is therefore time to use this opportunity to move with broader collaboration, greater resolve, and urgency, and most especially with clarity of the end we want to achieve. The challenge remains formidable and can only be addressed through multi-stakeholder action. Public-private, private-private, and whole of government is necessary. We need to continue our work to create the policy environment that fosters innovation, competition, but at the same time promotes responsible behavior. invest in digital public goods that are intentional in addressing well-entrenched barriers such as gender inequality. Design and deliver products that are fit for purpose, that not only do no harm, but do real good for the customer. Embed financial education in institutionalized learning in schools, outside classrooms, but also in crucial moments of decision-making, such as points of sale, points of use. Create partnerships on financial education to reach most of the population, especially the most vulnerable. We should also guard the gains that we have seen in digitization by ensuring that new entrants benefit from a broader range of financial services beyond payments, savings, insurance, as we heard how important it is, credit, and ensure that there are consumer protection structures in place that will foster trust in the system, that risks are managed, and that there are mechanisms to support digital literacy, which we hope to narrow the digital divide. And finally, in all this, we need to be clear on the end we want to achieve. Financial inclusion, financial education, to what end? The UNSGSA has constantly emphasized that financial inclusion is not the end goal, but a means to positive outcomes. And financial health is one such key outcome that needs deliberate focus. The topic has become more important with the COVID-19 crisis that has exposed financial vulnerabilities across the developed and emerging economies. The World Bank Findex reports that in developing world, only half of adults can access a lump sum of funds in the face of an economic shock or emergency. The 2020 OECD survey also showed that including those of OECD countries, they agreed with the statement, almost half of respondents agreed with the statement that I have no money left at the end of the month. Resilience is a challenge globally. So in December 2020, Queen Maxima launched the Financial Health Working Group to develop a shared vision on how to elevate financial health as a policy agenda and advocate to public and private sector key decision makers to use the lens of financial health to look at outcomes instead of only access and usage of financial services. The value proposition for action is strong, as we have heard in the roundtable. There is evidence on the business case for financial health, as well as the clear support to other social and economic policy objectives. So the group has defined financial health, which clearly states that it is a state where a person or family can smoothly manage their current financial obligations and have confidence in their financial future. This definition includes elements of your state of finances over time to meet day-to-day finances, ability to weather shocks, ability to plan for the future and pursue goals, but also the feeling of confidence and security. This is important because we know of the strong linkage of financial stress with a person's overall health and well-being. Being clear on the elements of the definition will help us measure, understand the drivers and policy implications, as well as more clearly anchor interventions. A financial health lens in our work on financial inclusion and education may require a reorientation of our approach as we consider the outcome at the onset. It is not sequential. We do not need to have high financial inclusion levels to think about financial health. We could, or in fact should, be taking them together. How do we incorporate financial education within the broader strategy that promotes financial health? How does a financial health lens inform the design of credit and savings products, for example? And how do we measure progress beyond clicks in apps and accounts or wallets? But also, are they really designed for resilience building? We heard many good examples in the roundtable, and we hope we can document these, share these more broadly to policymakers and the private sector, and continue the dialogue in this regard. We also want to see measures globally that will allow us to benchmark and to measure our progress. Financial inclusion and financial education has also clearly linked to the attainment of the Sustainable Development Goals. It is crucial, especially in light of reverses in some gains brought about by the pandemic, to continue to promote financial inclusion and education as a key enabler to access to quality education, gender equality, growth, climate action, among others. There is already evidence of these linkages. There was, to give some examples, evidence from Indonesia on how a shift to card-based vouchers for 1.4 million recipients of subsidized rice resulted in 9 out of 10 claiming they had more access to high-quality food. Paying incentives with mobile money enabled health agents to register over 1 million new mothers in Bangladesh that accessed a maternal health program. Digital finance has also catalyzed a new wave of green finance with pay-as-you-go models. These are only some of the many examples, and gathering evidence and insights on these linkages of how financial inclusion in education enables these positive outcomes will inspire and inform policymakers and practitioners alike to be more deliberate in efforts that could lead to positive outcomes. Indeed, a focus on positive outcomes, or starting with the end in mind, reorients the way we design our efforts. The pandemic has brought a period of uncertainty, but has also given us a powerful sense of clarity of what needs to be done to ensure a more inclusive and resilient world. So congratulations to the BBVA for mounting this EduFin 2021. We hope for continuing conversation and concrete action in the positive outcomes we all hope to see. Thank you very much and good afternoon.
Thank you very much, Pia, for your presentation. I think your very inspiring words have been the perfect claps for this year's summit. Before I greet you farewell, I would like to thank the exceptional group of speakers, as José Manuel mentioned, 28 experts from over 10 countries who have generously agreed to join us during 5 days at this EduFin Summit 2021. And please note that all sessions will be available in the Center's webpage, bbvaedufin.com. I would also like to thank the almost 400 attendees who have connected to the summit from countries as varied as Argentina, Ghana, Germany, Serbia, Morocco, Mexico, India, or the United States. We hope to see you next year at the next edition of EduFin Summit to continue the discussion about financial education, a topic that the Center for Financial Education and Capability will continue to foster and support. Thank you.